Hello, everybody. Kirk Spano. 2 days to ho time. I just want to give you the option selling outlook. Now, remember to read the macro pieces, which will be titled Macro Dashes, starting in January again after all the annual pieces are out. Stocks of the week, which is going to be every week from now on as a summary piece, and then the ETF asset allocation every month. I'm trying to simplify the title so you know what it is. The short story right now is that I expect seasonality to win for the next month. And seasonality at the end of December and into January is virtually always bullish. Now, how January ends can be a different story. I have warned on stocks on spaces on X, Twitter X, as it has previously been known, the social media previously known as Twitter, now known as X. I have warned that if January starts up and then turns over and ends the month with under a 2% gain, and especially if it ends up negative, that is a pretty bad sign. Now, if it just starts down and keeps going down, that's usually pretty bad too. An up January, especially more than 2%, almost always coincides with an up year. I think there's like 3 or 4 exceptions. If it's between 0 and 2%, it probably leans bullish, but not by enough to give yourself any certainty. And if January is negative, the year is almost always negative. So we'll keep an eye on that. Right now, the S&P 500 equal weight is actually oversold on the daily chart, which means for several weeks it could chop its way back up. If you take a look at the weekly chart, though, didn't get all the way to oversold like it did here, and especially in 2022 during the bear market. What I think is going to happen, I think we get a little jitterbug up, and then potentially we get some steps down, so that at some point in 2025 it gets back down in here, which would be, as we saw here, as we saw here, and as we saw here, a buying opportunity. So this chart, RSP, which is the equal weight S&P 500, if it gets oversold, that means that pretty much everything has been going down in the S&P 500, and certainly mid caps and small caps would follow. This is a buying opportunity. So let's keep an eye on the weekly RSP RSI chart. So I'm in the process of writing this. I have to go into Schwab and Interactive Brokers and update everything from last month. So I will do that. I'll get that done this afternoon. And then we will also have a stocks of the week. Maybe not until Wednesday, the 26th. I don't know how hard I want to work today. We did get all of our wrapping done, though, so I think we're in good shape there. I do have a couple of phone calls this afternoon, which I didn't schedule, just you people using my calendar wantonly as you were during the holiday season. But I do have a lot of work to do the day after Christmas. I guess that would be Thursday. Friday and Saturday, I am shopping for a car because Kirky hasn't had a car since April, and I'm getting tired of Ubers, especially when it's cold. So I'm looking at the Hyundai Santa Fe, the limited edition, and I'm going to look at a Ford Edge, a couple of Kias, Toyotas, Jeeps, but I'm pretty much leaning towards either a Ford or a Hyundai because they're both leaders in the EREVs that are coming out. And by the end of this lease, and I will lease because I can run it through my company and get a little tax break, I would like to have one of those customer loyalty discounts for my next car, which I'll probably buy. I don't know if I'm going to always have one car on lease and purchase one car. I guess that's possible. But at some point, I do have to buy another brand new car. And I have been pushing that out because the technology, and this is why I'm getting into this, the technology on batteries is getting really good. There were 2 more breakthroughs that hit the news over the weekend. One had to do with lithium batteries, one had to do with using silicon. So we are likely to see the new batteries for the EVs and EREVs and for power plants, for electricity, getting really, really good, which is what we've been talking about over the years. And we already know that the efficiency is up 9-10 fold in the last decade. Somebody mentions the Lincoln Nautilus. I actually, that is actually on my list. No, we still have the Volvo, but we only have one car. We both have jobs, and I'm going to open an office in the fall, and I want to drive around with the grandkids, when Jolene is off showing houses. So yeah, I just think it's time for a second car. In any case, the battery technology is getting so good. And I know everybody likes to talk about energy density. Well, the energy density equation is moving rapidly to the point where, as the price of fossil fuels eventually goes up because supply will eventually go down, we will push ourselves into having to switch to batteries, whether or not we like it, whether or not it's for climate change reasons. It'll just become an economic reason. And the thing that I have said over and over again is that when the sticker price of an EV or an EREV is about the same as an ICE vehicle, it'll be a no-brainer to switch to that. So when you can get a range, and I forget which car did it, I think it was actually the Hyundai Ioniq 9, which isn't in production yet. But if you Google that or you Perplexity that, I believe it's the Ioniq 9 that has a range of almost 400 miles on a single charge. So the battery technology is getting really good. So I'm not positive that it'll all be EVs or all EREVs or part of this or part of that. But the batteries are just getting so good that it is inevitable that we go in that direction. Now, is it going to be 4 years further out than I thought? It sure seems that way. But we'll see. There is an article in Bloomberg and one in the Wall Street Journal, so they both covered the same thing on the same weekend, that Republican House members, and they only have a 220 to 215 advantage, and Republican Senate members at 53-47 are unlikely to strip out very many of the IRA tax benefits for clean energy. Now, I think windmill subsidies are in trouble. I don't think anybody's vested interest in that is big enough to not strip those out. And they're going to have to give Trump some victories. But I think the vast majority of the IRA is going to stay intact. The narrative on clean energy is so negative right now, and so many chest thumpers and foot stompers and ideological knuckleheads running their keyboards in their mouths, that we can get really good deals on a lot of the clean energy stocks. And I think between soon and later in the year, later in 2025, it'll be the last great chance to buy some of these companies on the dirt cheap. And remember, most of them have growth rates of 20, 30, 40, some in the 50% range that look sustainable for the better part of a decade. So we're going to want to keep our eye on that. One thing that I think that we need to think about here is what to do on a correction. So let's suppose 2025 ends up looking a lot like 2022, right? Let's suppose we get something like this, which basically is my base case. What if we get a very 2022-like year? Well, that means that going into it, especially if we get a rally here in the next month, which is what I think is going to happen, although always hard to know, right? If we get a rally here in the next month, we're going to want to sell a lot of covered calls and trim some profits in the new year, first few weeks of the year. If liquidity starts to tighten up, we know that everything follows liquidity. I've covered that a dozen times. As financial conditions in the market and liquidity get tighter, asset prices will go down, and virtually everything will go down, some more than others. The best hedge is to have extra cash so that you can buy things on the cheap. So just keep that in mind, is that if we get a sell-off somewhere between now and then, you'll want to have been raising cash, because the odds of the stock market breaking out much further, and you can see the trend here, is pretty slim. If it was going to go way up here, it would already have been on this line, right? So the odds are get a little correction, then get back in here somewhere above the solid green line, the midpoint, and then it comes back down. Now, here is where the fair value gap is. Let me give you a worst case scenario. In the worst case scenario, China's stimulus doesn't work very well or very quickly, and we get a trade war, and war gets worse in the Middle East, causing energy prices to go up. In that world, supply chains get constrained, liquidity goes down, and oil prices go up. That is a recipe for stagflation. If that occurs, I put it at 20 to 30%, 1 in 5 to 1 in 3 likely, then we can get all the way down to 2020 prices. Now, is it the high of 2020 or the low of 2020? That's hard to say. But stagflation would destroy the market. So if you go way back here, I have talked about this area. See, my orange box is still there. The 2014 to 2016 sideways market, kind of a stealth bear market where we marked time, probably as bad as it gets because we almost tested it right at the top of that range at 2018, and we got into that range in 2020 before the QE infinity and massive bailouts for COVID. So you can see, and let's pop this over to SPY. Let's make this a little bit easier to look at. We could see the S&P 500 in a worst case scenario all the way down for sure into the 200s, and it's just hard to know where in the 200s. Again, that is not my base case. I don't think it's real likely, but we shouldn't dismiss it. So if we get a correction, we have to understand why it's happening. Is it just uncertainty and high valuations consolidating? Or do we have real liquidity, supply chain, and energy price problems? Those are the three things to watch: liquidity, supply chains, and energy. If all three of those go in the wrong direction, you get your perfect storm. At that point, credit gets real screwed up. And I don't know how fast it would be, but I have mentioned a $500 billion facility to bail out the banks. Don't call it QE, but it's QE. They'll call it a special facility or whatever they'll call it. So if suddenly we start hearing about a $500 billion or $1 trillion going into the markets, you hold your breath, you wait a week or two, maybe a month, and then you start buying the correction. But if that is slow to happen, and if they don't turn off quantitative tightening, if those things happen, then yeah, we could see a 60% drop in stocks. So we just have to be aware that those things could be out there. When valuations are high, it's more dangerous. When valuations are high, even with the little pullback, right? Even with that little itty bitty pullback in the last, month. Because the first 2 weeks after the election was rip roaring. Then what did we get? 9 down days in the Dow. The equal weight went down 3 consecutive weeks. So you're going to want to be careful. And if we get a little rally here in the next month, I would just renew what I've been telling you for the last few months, which is trim into it, especially your high beta stuff, especially highly appreciated stuff, but more especially all that middle of the road freaking S&P 500 crap. If you read my article over the weekend that was on Seeking Alpha, it's not in the service because I've talked about it before. I just summed up some things for Seeking Alpha to make my official prediction. My official prediction for the S&P 500 in 2024, when it was down in the 4,000s, was that it would get to 5720, and we're a little above that. My official prediction for 2025 is that it will be 5720, exact same number. So I see a round trip year coming, and that's if we don't get the worst case Armageddon zombie apocalypse Jeremy Grantham scenario. So maybe 1 in 5 likely for the Armageddon zombie apocalypse. 4 out of 5 we get kind of a choppy year that's give or take around even. Selling options is a great strategy for that. Selling covered calls into overbought markets, and then as a correction plays out and we start to get oversold, right? And RSI is the easiest shortcut. Remember, weekly, not daily. But here, 2020, oversold on the weekly RSI. 2022, oversold on the weekly RSI. A little correction in 2023, oversold on the weekly RSI, and then it just ripped. So this is what we're looking for. A number around 30 on the S&P 500 and the S&P 500 equal weight, because that's not so overweighted to the Magnificent Seven. And I suggested that Palantir and MicroStrategy in this last article might force a change for the Magnificent Seven to the Nifty 9. And actually, I guess you could throw Broadcom in there. So I don't know. The Terrific 10, the Big 10. I don't know. We'll see what Kramer names it. Maybe there's a stock or two I'm missing. Dirty Dozen, anybody? Well, whatever. The very top end, the mega caps, pull the the market cap weighted indexes. So you have to look at the other 490 stocks separately than those 10 biggest ones or 10 of the fastest moving big ones. And what you'll find, and this is a phrase I haven't used in a long time, is that the middle of the market pretty much sucks. And all these articles that you see about, I'm buying these dividend stocks hand over fist. And look at this great 21% yielder. Horseshit articles. Those analysts, they're really just bloggers, right? They're people who figured out they can make money selling subscriptions. They're going to get a lot of people blown up, just like they did in 2022 and every other year that we've had a correction. And remember, although the age of QE is not over, because they're going to definitely use it to take care of the baby boomer retirement crisis, the reality is that government usually requires a crisis to pull out the bazooka. They don't plan ahead. Too hard to explain that to a population that only pays attention to what's on their grocery bill and whether or not they have a job. There's not a lot of sophistication. This goes way back to when I was in college and I heard a couple professors talking about it. And they use, the American public's not very sophisticated and 60% of it isn't. Well, and they vote. So my hope is that President Trump can unleash even more American exceptionalism rather than stifling it for a while. But either way, I just think the transition is going to be tough in the face of trying to fix things that really haven't been fixed in a very long time. And I don't know that his solutions and Republican solutions are going to go a long way in fixing things. The thing that I am confident in is that eventually we get a crisis, we print our way out of it again, because we can. If you take a look at debt to GDP growth rates, what you find, and then when you compare money supply, what you find is that things have actually been getting better since COVID. Not as much as we would like, but because of all the advantages of America. And I talked to a couple of immigrants over the last 4 or 5 days, immigrants who are investors or first generation people who are investors here. And they're like, people don't get how great it is in America compared to a lot of other places. Now, I would never say best, because there are probably some little spots in the world where you go, paradise. But from an economic standpoint, we have no peer. And that has allowed us a lot of flexibility to do things, some that we shouldn't have done, but did nonetheless, because much like Doritos, if we need to, we'll just make more money. So in 2025, we'll see if my expectations are right. Maybe I'll be a year early. I don't know. But ultimately, if we get a correction, you buy it. Where you buy it, hard to tell. But for sure, when RSI gets oversold, you start to buy on that weekly. And if the monthly chart gets oversold, let me show you something on the monthly chart. Right now, the monthly SPY is still overbought. But here, end of the dot-com crash, end of the financial crisis, and really all of these that almost got oversold were great places to buy, right? This is about a year ago. Actually, this is about a year ago. This is 2 years ago. This is 2022. This is 2020. So if somehow the monthly chart gets oversold, you buy everything. Not really everything, but you could. Let me get back to the last point. I mentioned beta earlier. When the market has had a huge correction, do you buy? I'm gonna give you the leading question. Objection, leading. Do you buy beta or do you buy the blue chips? Trick question. What do you buy? What don't you buy? I've used all the terms so far. You buy beta, you buy the blue chips, and you don't buy anything in the middle of the market. You don't buy the index. You don't buy some choppy shit stock in the middle of the S&P 500. You buy the highest growth, highest beta names you can, and you buy the monsters, right? Your Googles, your Amazons, your Apples, whatever. And I'm actually adding an ETF to the Global Trends ETF for the 2025 VSL. And I've got about 10 stocks that I'm adding to. I'm going to subtract about 10 stocks. So I don't want the list to get longer. About the second or third week of January, I will put out the new VSL, and you will have to sign up for it again. It'll have all my updated 5-year ranges. And I'm just going to put out a new VSL every year, because I looked at how many people subscribe to my services, how many clients I have, and then I looked at how many people are using the VSL. And you may not believe this, but there's people who no longer subscribe using the VSL. And that's naughty, naughty, naughty. So I'll just shut down the 2024 one and start a new 2025. And over a few days, everybody can sign up and I'll just approve everybody on Google. For right now, if we get a rally, and I think we're gonna, sell covered calls and trim your beta, especially, if the beta rallies hard here. So people will inevitably ask, what about a Metis? What about AST Space Mobile? What about Rocket Lab? I'll tell you what to do when the time comes. But for those of you who own a whole bunch of S&P 500 stocks because some dividend dude told you to buy it, you should be looking to get rid of those. Take a look at their charts in 2020 and 2018 and 2016 to 2008. Here's one. Everybody likes to talk about Simon Property. About 50 to about 12, 75% down. 145 down to about 40, 60% down. 135 to 80. Was that about 40% down? Do not think that you have protection because you own a dividend stock. And if you own a dividend stock that has no growth and high debt, you are playing with fire because you'll get wackadoodled at some point. Here's one. Here's one that I own. No, it's a weed stock, right? It's cannabis, innovative industrial. Monthly chart. Oh, look. Can it get down in here? It can. But look what happened the other two times. So I actually am selling some cash secured puts on innovative industrial. Take a look at it on the daily. What is it doing today? Yeah, this is it. This is the sell-off. And Teresa actually had a chart a couple weeks ago. I think she said 70 something would be where you start buying it. I think it's 63 to 70, I think is what she said. You guys should be so happy that Teresa gives us her charts. So it's breaking out of these daily ranges. More important is the weekly, breaking out of these ranges. And could it get into the 40s? It could. Here's the thing with innovative industrial. They had somebody default on 5 greenhouses. Innovative industrial is just going to take them all back. They're almost whole on it because they had security deposits, and they'll get 3 or 4 of them released pretty quick. And my guess is they sell one. They'll right size a little bit. So I think this is a pretty easy one to be looking at buying. When they pay that big fat dividend, that was very well covered. Very well covered. So I'm going to take a look and see if there's really any threat to the dividend. I don't think there is. But what they did last time this happened to them, and it did happen to them before, they just didn't raise the dividend for a year. So suddenly you have a company with a dividend yield of, what is IIPR doing right now? Dividend yield of over 10% suddenly. And what's the story here? Very high margin cannabis business. The most expensive produce out there is generally organic strawberries in a perfect environment. That might even be as profitable as cannabis. Weird, right? But probably not. But the downside for innovative industrial is that they have to switch to high margin microgreens and organic strawberries and a few other things. They'd still make money, just not as much as with the cannabis. But if we keep having more stuff get wrecked by weather, who knows? Maybe food becomes as valuable as marijuana. We'll see. There's just not a lot of downside for these guys. They have a backup plan that's almost as good as plan A. Yeah, so their ex-dividend date is the end of the month, the 31st. So if you want to nibble into this one, I wouldn't max out your allocation. But I never really got as big of an allocation as this one as I wanted because it went up so fast. So, because if you take a look, we were buying it in 2022 for the most part. Went from 80-ish up to 120. All right, had a little spot to buy in here. But now we're back to almost 2022 and 2023 prices. This was the hype and the massive bailouts. We're 5 years into people wondering if they're ever going to make it easier on the cannabis industry to use the financial system. And we're 5 years into the right sizing of the cannabis industry. So innovative industrial really just becomes a cash flow machine. Probably not huge growth, which we've talked about before, but a 10% dividend for something that ain't never going away. And there's only a couple of small competitors. Remember, they're the greenhouse technology company. They don't sell the product. They're a wholesaler. And a landlord, really, because really they lease everything out, just collect the rent. But if they started growing strawberries, they could probably just do it themselves, keep everything. I'm going to try to contact them and see if I can talk to them. But the numbers say we're getting to a spot where you should buy this. So I would start scaling in real small position and then sell a cash secured put. I'll figure out which one to sell here. If not in the option expiration update, I will just put on a separate piece next week. So I do want to do a little follow up, but their balance sheet is great, so I'm not really worried about that. But you should expect that they don't raise their dividend for a while, so you're just buying in cheap. And these are a type of dips that you want to buy. This is a high beta name. They're getting their beta beat up right now, so it could definitely move in the opposite direction if everything else is getting beat up and people are looking for a haven. And that is the thing to understand, is that sometimes certain stocks get beat up ahead of time and then they come out of it sooner too, compared to the market. So if most of the market is going down, the ones that got beat up 6 months or a year prior, they've already been beaten up. All right, anything that you're looking at in your own portfolio that you want to chart out real quick? Going once. MP Materials. Yeah. So this is one where I think the EV negativity is overstated. Could it get down back here to 10, 11, 12 again? It could, but it got the buy signals here. And got one here too. So this down signal probably reverses near this line. Man, I have a hard time seeing it getting back down to 11, 12, but it might. If you don't own it, probably starts by selling puts. You're going to get a good premium on this one. But yeah, it could get down to 10, 11, 12 again. I do think the downtrend is broken, though. I do think that you're going to start to see this channel is going to pivot up. So it's going to, from right in here somewhere, you're going to get your pivot up on this channel. This trend is basically broken. Now it just has to test and then confirm, which will happen sometime in 2025. Again, zombie apocalypse, Armageddon zombie apocalypse notwithstanding. We'll see. I don't know anything about Atmos filtration. It's not one of my stocks, so you can go figure it out yourself. Everybody should be buying Flagstar. It's about as beat up as it's been chopping around. Fell off a cliff and now it's just been chopping around. It's a whole new company though, right? Just chopping around. Got a buy signal. Channel's already starting to bend upward. Just a matter of time. I like selling puts on this one too. I don't know if the premiums are very good or not. I'll take a look. I'll put that in the article. Ooh, what has Generac done? We talked about selling covered calls on this one a while back. Boy, wouldn't you love to have sold the covered calls when we talked about it? Yeah, I mean, this could pretty easily go back to 140-ish. I wouldn't be buying this one just yet. If you own it, I could see selling covered calls on a little rebound. So I do think it comes back down in here, right? That right in here is probably where it ends up sometime. And it could be worse, but it's just such a good company. Again, Armageddon zombie apocalypse notwithstanding, make sure you know your true risk tolerance. This is one that if we do get a huge sell-off, let's say it gets back down to 100 again, right? If it gets back down in here, right, back up the truck, right? If it gets back down in here, you're looking to buy. That's the weekly. If the monthly gets overbought, ooh, doggy. Excuse me, oversold. If the monthly gets oversold, ooh, doggy. Now, if there's a 1 in 5 chance of the Armageddon zombie apocalypse in 2025 into 2026, right? If this turns into a financial crisis, and again, that's not my base case, but the Middle East and China and new policy that historically has not worked well. We could see a 50 or 60% stock market crash. I don't think it's a base case. I don't think it's likely. And if it happens, it goes away quick because they will print money. Remember, new Federal Reserve chairman in May of 2026. It'll be Trump's guy. So either Powell has printed money before then to keep the job, or the new guy comes in and prints money because that's how he got the job. One or the other. We're going to get QE in 2026 if there's any speed bumps. So he asked about oil, and charts on oil don't matter right now. Either there's an oil shock or there's not. Roll the dice on that. Does Iran take one more swing at Israel, or either way, does Iran take another swing at Israel, in which case Israel's retaliating big, or is Israel just going to do it anyway? It's been said in foreign affairs and in the regular press too. The Israelis are basically saying the same thing that I have said for years, is that when it comes to terrorist organizations, you have to take away their checkbook. Blowing up Iranian energy infrastructure, military targets, and a couple of select political targets is the way to blow up their checkbook, right? Yeah, I have been screaming at you to buy New Fortress Energy for weeks now, and it's up 20% today, somebody says. Yeah, I strongly encourage you to think about those 2, 3, 4, 5-year time frames way above the monthly and next year. The upcoming year is for you to find opportunities to buy things that you want to own for longer. Don't treat stocks like a high school crush, right? You're just going to have a new one next year. Treat stocks like a spouse. Figure things out in the short term, then put a ring on it, right? Beyonce told you, you're not allowed to buy Dell. You're not allowed to buy HP Enterprise right now. Period. End of story. All those companies have trouble right now. I mean, I'm actually short SMCI, right? I think SMCI might go out of business. But Dell, why? No, just don't do it. I don't care if the Wyckoff Spring says buy it. Don't care. No bueno. I don't like any of them. This has become a very commoditized business. That's why Supermicro might get blown up. If Supermicro falls off a cliff and the whole group is down, coming out of that scenario where one of the big competitors disappears or is crippled, then you can buy Dell and HP Enterprise. Think second and third level. Stop listening to all these superficial fucking idiots, sucking idiots, sorry, right? This doesn't make any sense. Why would you want this? It got above the fair value gap, came down, tested it, got up, and then it came back again. Just choppy. That almost always leads to lower prices. I'll bet you $1 right now. Dell ends up going under 90. Yeah, under 90. Calling it. Maybe not much. But again, Armageddon zombie apocalypse could be worse. All right. Let us call it a day. Teresa, enjoy Italy. You are not allowed to look at the website. You are not allowed to. Are you bringing a laptop computer, Teresa? No. I'm telling you, don't do it. Don't do it. Don't do it. First of all, they're a pain in the ass to get to travel with, especially out of the country. Don't bring a laptop. You got your phone. Use your cell phone. That's the only thing you should have. Do not take your laptop. I'm telling you, if you post anything while you're in Italy, you're in trouble. Big, big trouble. Well, she's not in Italy yet. She will be after Christmas. Do not take your laptop. You will thank me later. I promise you, you will thank me if you do not take your laptop. You don't need it. You don't do any trading this week, right? Just set yourself up so that, you have your cell phone. I mean, if you have to sell everything because the world ends, you can use your cell phone to sell everything. Otherwise, do not take your laptop. Do not post anything. Stay the zuck out of the chat room. Do not bring your laptop. Just your cell phone. You got a good enough cell phone, right? You got an Apple or an Android. Which one? Apple. There you go. That's all you need. That's all you need. That's all you need. All right, everybody. Have a fantastic Christmas. I've got a whole bunch more coming out at you over the next few weeks. And then in the middle of January, I'm going to be on the Investing Experts podcast again. And we will figure out what's going on in the middle of January. Going into the inauguration, the re-inauguration, and the Fed meeting. Because that Fed meeting at the end of January is going to be super important. If he doesn't lower rates, then we're going to get that correction. In my opinion, Powell should preemptively be lowering rates, get as close to the neutral rate as fast as possible. And because everybody talks about inflation when they shouldn't be, because it's been in everybody's mind for the last 80 years, even though it shouldn't have been, right? Inflation is just overdone. It's just a dumb argument. The federal government can get food prices, energy prices lower if they want to. And there's so many entrenched interests that they don't. So, the Fed should just make sure that construction is set up. If construction is set up, let the government fix everything else. Fed's got to stop micromanaging. Employment is tied to manufacturing and construction and the ability to export a little bit. Lower interest rates faster. And I know everybody's all, inflation, man, it went up to 3.2%, man. It has nothing to do with the Fed. It has nothing to do with the Fed. It doesn't. It's all big business driven. When you want big business to lower rates a little, or lower prices a little bit, then lean into your government to say, hey, right? Robert Reich put out a post, said that the grocery industry made $29 billion in profits. And it sounds bad, but then you realize there's 330 million people here. So for $90 in profit, you get groceries. That's what it costs you. It costs you $90 in profit. So the people bringing you groceries, you gave them $90 for that. It's a pretty good deal, don't you think? So if the price of the actual groceries are higher, it's not the grocer. It's something screwed up in the food system, like burning food for energy. That has been the problem for decades. We did it initially because we had so much food, not enough oil, and now the equation is shifting. It's another reason why the energy transition is coming. Technology will make it happen. How fast? Hard to tell. I don't think the big inflection is 26, 27 anymore. I think the big inflection is 29, 30 now. But between now and then, get positioned. And if you can become a partner on a farm, become a partner or investor in a farm. Something that's productive and profitable, and in 10 years might get developed. That's what you look for. All right. Have a great one. Really enjoy the holidays. And I will talk to you again in a week. Take care. Merry Christmas. Ho, ho, ho. I would have showed you my beard, but I don't want to. Merry Christmas. Happy New Year.